Good morning, everybody. It's Monday, July 10th, 5:28 a.m. Central Time. We've got a higher trade in the grain markets this morning. December corn futures up 6.5 at 5:01. November soybeans up 20 and three quarters at 1338 and a half. December Chicago wheat up 5 and three quarters at 672 and a quarter. December Kansas City wheat up 3 and three quarters at 823 and a quarter. December spring wheat up 6 at 860 and a half. Mackenzie, why don't we start with the weather this morning?
Weekend rains were better than expected in Illinois and Indiana. A band stretching across central Illinois into Indiana and Ohio saw a half inch of rain, up to 2 inches locally. Weekend rains also hit parts of South Dakota, Nebraska, Iowa, Kansas, Oklahoma, and the Mid-South. More rain is expected this week. The 5-day WPC forecast offers rain for Missouri, Nebraska, Iowa, Illinois, Indiana, Ohio, Kentucky, and Tennessee. Areas that may remain drier include Minnesota, North Dakota, and South Dakota.
So these weekend rains, this stuff for central Illinois and Indiana in particular, it wasn't in the forecast, not the forecast that I looked at on Friday. So I think that this was a little bit better than expected. When you look at the forecast moving forward here, you've got rains for some central areas of the Corn Belt. Some of your, I guess, peripheral areas going to be a little bit drier by comparison. Parts of Wisconsin, I know, are dry. Parts of southern Minnesota are becoming dry. The Dakota is going to be on the drier side. You look at the 10-day maps, you look at your Euro model, you look at your GFS. I think there's enough rain in enough places. I'm looking at the markets this morning. I don't think this is a weather deal. I think what this may be is a case of just consolidation in new crop corn futures, maybe new crop soybean futures, still kind of reacting to the acreage report, reacting to the idea that we may see some yield cuts on Wednesday. Let's talk about that.
Right. So USDA will release its monthly crop production and WASDE reports on Wednesday morning. In recent years, the USDA has not been known to adjust U.S. corn and soybean yield forecasts in July, but traders largely expect reduced yield numbers on Wednesday. A Reuters poll of analysts estimated the U.S. corn yield at 176.6 bushels per acre and the U.S. soybean yield at 51.4 bushels per acre. These numbers reflect traders' expectations of the USDA's numbers on Wednesday and not the final yield numbers.
Yeah, so you've got this whole thing where traders are asked to predict what USDA will print on the report. They're not asking traders what's the final yield number. They're asking traders what is USDA going to say on Wednesday, which is actually they're both difficult, but predicting what USDA is tricky to do because you're trying to kind of comb through their methodology. What have they done in the past? Are they going to slow play this? Are they going to reduce it at all? So yeah, despite the fact that they haven't cut or changed yields in July in a long time, I think it's warranted personally. I think that these estimates ahead of the report, 176.6 for corn, 51.4 for beans, I think those are appropriate. Even if they went lower, that wouldn't be shocking to me, given the crop ratings, given the drought that is still intact in a lot of places. So yeah, I mean, we're looking for cuts, and if they don't cut the yields Wednesday, guys, all that is, it's a kick the can down the road. We're USDA, we're doing our thing type thing. If they stick with trendline yields for another month, I don't think it's USDA committing to the idea of trendline yields. I think it's more like this is just how we do it, and we'll make the change in August.
So if you guys are not already subscribed to our premium content, you sure need to do so. Joe, can you tell me about the video you put together on Friday?
A few videos last week that you guys may be interested in. On Friday, Chris Barron from AgView Solutions joined me. We revisited 2023, so current year, corn and soybean budgets, and there's been a lot of things that have changed here. It's interesting stuff. If you guys were making acreage decisions today based on current prices, I think you probably would have planted a lot more soybean acres. But in any case, some really good stuff here from Chris. We talked about marketing as well a little bit. I did a video, I think this was on Thursday, corn and soybean acres June to final. So we saw this big blockbuster acreage report on June 30th. What happens to the acreage numbers from that June report to the final numbers. They do change, and they change quite often. We had some really good charts in that video. And then, as always, guys, June and July, we do pre-open weather updates Sunday nights. These go out before the market opens. I run through weekend weather, the forecast, perhaps what it means for the markets. If you guys want to see the premium stuff, sign up today. Jump on the email list, jump on the text list. Ton of info direct from us every single business day. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, guys. Give that deal a shot this morning.
USDA reported a flash sale of U.S. corn to Mexico on Friday. U.S. exporters sold 180,000 metric tons of corn to Mexico. Of the total, 45,000 metric tons is for delivery during marketing year 2022-2023, and 135,000 metric tons is for delivery during marketing year 2023-2024. Since the beginning of the year, Mexico has purchased 1.2 million metric tons of U.S. corn through flash sales.
Mexico is a very reliable buyer of U.S. corn. China's been the big, flashy new buyer in recent years. They've been totally absent as of late for the most part, but Mexico's always been reliable. You should see some more of this. There had been all that chatter about Mexico and GMOs, and they're still fighting about white corn for human consumption. But as far as commercial corn, they're still buying, and they'll continue to buy in all likelihood.
U.S. corn export sales improved slightly. Net corn sales of 251,700 metric tons for 2022 through 2023 were up 79% from the previous week and 62% from the prior 4-week average. Accumulated corn sales for the current marketing year are down 35% compared to the same period last year. Net soybean sales of 187,800 metric tons for 2022 through 2023 were down 17% from the previous week and down 45% from the prior 4-week average. Net wheat sales of 405,800 metric tons for 2023 through 2024 were up 161% from the previous week.
Greatly improved wheat sales. That's a positive. Where we also saw an improvement were in new crop corn sales and new crop soybean sales. New crop corn export sales, 418,000. Largest buyers there, Japan and Mexico. China is still very much absent from the corn market, or from the corn export sales sheet. New crop corn commitments are still down 45% versus the same period last year. Fourth worst of the last 10 years. New crop soybean sales were also much improved, 593,000. China, unknown destinations, the largest buyers. Still, new crop soybean commitments are down 71% versus the same period last year. Third worst in the last 10 years. So USDA on Wednesday, they're going to work with that new lower acreage number. They may cut the yield as well. And when they do that, they're probably going to have to cut demand to kind of solve for the balance sheet, essentially. They're not going to print a negative carryout. The number that could go lower would be the export number. They could justify it based on the poor pace of sales. Typically, you wouldn't see that this early in the year, but given this super tight supply and demand situation that you've got at face value, they're going to have to make some sort of downward demand revision on the new crop U.S. balance sheet. That's probably where it comes from, would be my guess.
Large money managers are net short the corn and wheat markets. CFTC released weekly commitment of traders data on Friday. During the week ending July 3rd, the funds were net sellers of 74,000 contracts of corn. They were also net sellers of 9,000 contracts of soybeans, and they were net sellers of 1,000 contracts of SRW wheat for the week.
So there was probably a little bit of additional selling in the corn market late in the week, maybe some selling in the soybean market, maybe some selling in the wheat market late in the week. But these numbers are fairly close to reality here. So your big liquidation event in terms of funds liquidating the net long in the corn market, that has come and gone. They're net short, maybe close to flat. The risk now is that, or the question now is, do funds want to build a net short position in the corn market? Do you want to do that with the crop rating of 51% good to excellent, with a bunch of drought on the drought monitor, with uncertainty regarding the U.S. crop production? I don't know. I mean, the bear argument, of course, is that the demand just isn't there. But that's one of the big questions for me right now. It's been you got to go back to the mid part of 2020 to see a real heavy fund short in the corn market, pre-COVID basically, or right after COVID, around that time frame. So that's one of the big questions for me as we move forward here.
Turkey is requesting that the Black Sea grain deal, which will expire here on July 17th, be extended for 3 months instead of 2. Ukraine's president visited Turkey this past weekend as part of a diplomatic tour of NATO countries before the alliance's summit this week in Lithuania. Turkey's president believes Ukraine deserves NATO membership. U.S. President Joe Biden, however, is opposed to the idea, saying Ukraine is not ready for membership.
There was a couple other things too. Like I think they said Putin was going to visit, I believe it was Turkey in August,
That's correct.
but August is too late for this. So they need to fix this prior to that. And then the other thing about the Black Sea that was, I think, over the weekend was that the U.S. is going to send these cluster munitions to Ukraine, which there's a lot of people on different sides of this. Should we still be sending weapons to Ukraine? What weapons should we be sending to Ukraine? How much money should we be sending to Ukraine? That's not anything that's going to impact the markets. I still think that traders are just very weary and exhausted, tired of this story. So it'll matter when it matters, but it doesn't matter today.
On Sunday, Janet Yellen indicated her talks with Chinese officials during her trip this past week improved ties between the U.S. and China. The Treasury Secretary's trip coincides with export restrictions from both countries for high-tech products and materials. Yellen visited China to discuss U.S.-China economic issues, national security, climate change, and global debt challenges. Yellen's visit included talks with key Chinese officials. However, she did not speak with the Chinese president.
I suppose it's good that they're talking, but this is not going to make U.S. soybeans any more competitive on the export market. We want to avoid any sort of trade war with China, although there's a lot of things going on with these microchips behind the scenes that seem to be a really, really big deal. It all ties into Taiwan and China and chips and that sort of stuff. So I don't know. It's good that they're talking, but it's not going to solve our export problems in regard to corn and soybeans for the moment.
The Federal Reserve will likely hike interest rates to a 22-year high later this month. The June jobs and wage data shows that the economy hasn't slowed as much as Fed officials anticipated. Unemployment declined to 3.6%, down 0.1% from May, and wage growth grew 4.4% on the year, matching gains from the 2 previous months. Following the jobs report released on Friday, the Dow Jones fell 0.5% and the S&P 500, along with the NASDAQ, slipped lower. The economy is predicted to further slow in the second half of the year as consumers exhaust their savings and the effect of interest rate hikes start to show. The Fed's next meeting will be on July 25th and 26th.
Treasury markets indicate that there is a 92% chance of a rate hike on July 26th. So I think the general trend in terms of interest rates is higher for longer. That's kind of been what the Fed has been leaning toward for a while now. So, go back a couple of months, there was this idea that maybe the Fed would even be cutting here in 2023, like second half of the year. I just don't think that seems likely now. There's still recession talk floating around. It's really hard to have a recession when you got 3.6% unemployment. Mackenzie, what did cattle do last week?
Cattle futures were up on Friday. So feeder cattle futures lost about $6 last week, but managed to gain just over half that back on Friday. By the close on Friday, feeder cattle futures gained an average of $2.58 on the day, gaining anywhere from $1.80 to $3.27. Live cattle futures closed on Friday an average of $1.13 higher, ranging anywhere from 42 cents to $2.42 higher. For the week, cash cattle prices were steady to $1 lower in the Southern Plains at $1.78. They were steady to $1 higher in Nebraska at $1.83 to $1.85, and they were steady to $3 higher in the Western Corn Belt at $1.83 to $1.84. Choice box beef ended the day on Friday at $316.90, down $2.97 on the day. Select ended the day at $285.63, down $4.34 on the day.
Outside markets here early on Monday, guys. U.S. dollars up just a little bit. Stock market's off, has been under a little bit of pressure here. Bonds are off a little bit. Gold and silver mixed. We've got crude oil down 59 cents in the August WTI, 73.27 last trade. Have a great day, guys. We'll talk to you Tuesday morning.